Hello and good morning. I welcome you to the morning meeting today on Wednesday, the 3rd of January 2018. This is Jens speaking, and I'm exclusively presenting this format to you here for JFD Brokers as the head of or global head of research and education at JFD Brokers. So yeah, we want to have a look at the markets, how things are going. We want to have a deeper look at the developments in the DAX, which started quite weak into the year 2018. We dropped below 12,800 points, and all in all, it looked very, very serious. And then the market was capable of stabilizing into the afternoon, currently trading around 12,900 points. And as you can definitely clearly see, from a technical, first of all, let's have a look here at the pure technical side, and then have a look at the intermarket correlation and developments here, which caused this drop here on the downside, and which is currently obviously the main driver. So from a pure technical standpoint, this stint here is first of all potential fake out on the downside. So if we are here right now, not making it on a closing with a close below 12,800 points, if this does not happen, chances are not that bad that the market will probably see a pullback, at least up to 13,000 points. The thing is that everything, in fact, below here on a daily chart, everything below 13,300, 350 points on an hourly chart, everything below 13,000, I'm sorry, 13,000. 130, 150 points should be considered bearish, and there's a chance, high chance, I think, that with a pullback here to this level of 13,000, probably 13,050 points, we find a short trigger against which we get to see another drop, which will push us towards 12,800 points, probably below that level, and then we should see from there if the market can drop further. Where the 200 SMA comes into play, 12,600 points around, if we can hold this level. If not, further losses are likely. And all this, by the way, depends highly right now. It highly depends on what developments we get to see in the euro. Because, and this is the thing, so what you can see here is the euro yesterday, that was here around, oh, by the way, let's go down here to the 50-minute time frame. So currently we see some weakness, even though, by the way, German unemployment data surprised on the upside. So here you can see this, that the euro started to top out around 11, yeah, that was 11:45, 12 p.m. German time in this case, so 1 hour before its GMT. That's something around 11 a.m. GMT, that the euro topped out here and started to stabilize, even though it stabilized on a quite elevated and high level, but it was capable of stabilizing the DAX here. And then, as you can see here, from especially in the afternoon, the DAX was capable of using this momentum, which where the euro, which got stuck a little on the upside around 2080, 121. It used the chance to push back above 12,900 points. Here, find a close significantly above 12,800 points, and that way making it possible to at least get to see this pullback towards 13,000 points. But the question now is the DAX really capable of doing that? We highly depend, I think, on data coming from the US economic side here, which means ISM manufacturing today, which is coming in at 3 p.m. GMT. We have the Fed minutes from the last event, which took place in December, taking place at 7 p.m. GMT. Tomorrow we have the ADP data set. We have also, oh wait a second, is it? No, it's only the ADP data set. Then we have on Friday the non-farm payrolls plus the ISM non-manufacturing. And if these data sets come in, let's say, better than expected, and take some pressure from the US dollar and result in the euro keep on correcting most of its gains here it has seen, especially yesterday into the start of the new year, and we pull back towards 17. I'm sorry, by the way, that's not 117, but it's 119, 1940, 1950 here. So if we pull back to this level, to this region here, that this could at least stabilize the DAX a little. So there's a high correlation right now, negative correlation between the euro and the DAX, meaning if the DAX or if the euro goes stronger and moves higher, the DAX should usually go lower, and the other way around. And so this is definitely something you should definitely watch at right now. So the correlation is definitely given here. US dollar has seen some significant losses over the last weeks. So last 3 weeks, in fact, so lost most of its lost all of its gains against here those September lows, and is right now testing them again. And if we can stabilize against this region first and then push higher from here, we have to remember that the US dollar index future in this basket, the euro, has a weight of around 60%. That this could then definitely mean that good data from the US data docket here could push the DAX higher. On the other hand, we have also to remember that if the data disappoints, even though most of a disappointment from a data set here should be priced in, even though there is a slight chance that the US dollar still will be under pressure, and this could definitely avoid the DAX testing the region around 13,000 points here. So that's definitely something we should take into account here. For the DAX, so short term, very short term, intraday, there is potential up to 13,000 points, especially if the US data is capable of stabilizing US dollar. If the DAX makes it up to 13,000 points, even then, chances are high that we are not done on the downside, but that there's another push lower here, especially, by the way, if you take into account that US dollar, US equity markets here, the Dow Jones, for example, or also the S&P, has not shown any willingness to see a corrective move here, at least a small one. In fact, the VIX here, the volatility index on the S&P 500 dropped below 9. Dropped below 10. It was just 10, but nevertheless showing again very low volatility here. And if this changes and the U.S. equity markets start to correct here, probably also a bit, dip a little deeper than what we got used to over the last 12 and 13, 14 months, where we haven't seen a 3% corrective move here. So meaning in case of the Dow Jones, like we are pushing at least down towards 23,650 points, which is something like 1,200 points, and coincides kind of a corrective move of 5% here. This could also weigh heavily on top of the current euro strength here, could weigh heavily on the DAX here, and then push it below the simple moving average 200, and leave the DAX vulnerable to further losses down towards 11,900, probably 12,000 points, somewhere in this region here, the region of the August lows. And that's also something you should definitely take into account here. And nevertheless, short term, there's a good chance that we see at least a push up to 13,000. Nevertheless, some bears might consider this level to be attractive for another heavy, another push and another motivation to sell the DAX aggressively against this region here. By the way, while we were talking about the US equity markets, not sure whether such a corrective move, if it finally happens then in US equity markets, will coincide with risk aversion. But I think from a pure technical standpoint, dollar Japanese yen has a very interesting level right now here around 112. So short term, but also probably a little longer term than or midterm, it could lead to further losses, which could push dollar Japanese yen then below 110. But first of all, short term, the region around 112 is very interesting. I think it's a level which once it's broken, could push dollar Japanese yen down towards 110.80, 111, and then also below that level. And we get to see a test of the region around 110 then soon after. So FX traders, short-term FX traders, are definitely watching the region around 112 in dollar Japanese yen right now. Very, very interesting level. If such a move, by the way, happens and coincides with, again, US equity markets coming under pressure, this is also something which could then put some significant pressure on the DAX on top of the current pressure, which we see mainly based on the euro strength. Also very interesting to note here, WTI crude oil. It's very, very interesting, I think, the fact that we are very extended, seem to be very extended on the upside. And on top of that, I'd like to remember you guys that currently we get to see a so-called sentiment extreme in the crude oil market, in the commitment of traders report here. So we haven't seen such a huge net long exposure ever before. The last time we've seen something similar in terms of a net long position was here. That was last year in March, when we dropped over 5% within one trading day. That was based on crude oil inventories, which came in I think above expectation. So there was an, let's call it, oversupply, which led to kind of a domino effect here. So why do I mention this? Well, with such a sentiment extreme here, it's not the most attractive region to be aggressively long against here in WTI, even though that might seem significant, this breakout here, and some might say, hey, if we make it above that level, there's further room on the upside in WTI, which could easily push us probably up towards 90 or so. But currently, I'd be really careful. In fact, short term, I'd favor short engagements, because what you never really know is when such a sentiment extreme is finally reduced here. So meaning that there's a good chance that tomorrow around 4 p.m. GMT there will be the crude oil inventories published, and that then, yeah, really dynamically and without further, let's call it further notice, the market will just aggressively sell off once the sentiment extreme probably reduce. The only problem is you don't really know whether this is the driver or it's something else which will then lead to such a reduction of the sentiment extreme. Nevertheless, I'd like to mention this here and just say take care, be really careful here in terms of long engagements, because such a reduction of a sentiment extreme could result in a huge and heavy short-term sell-off here, yeah, it's probably causing kind of a domino effect here, which could push WTI prices then significantly lower. Something to definitely or something definitely worth watching. Yeah. So that's it on WTI. Let's have a final look here at gold. So after the significant push on the upside here, well, probably we get to see now a corrective move thanks to the US data, which comes into the weekly close here. Several important data here, which could result in gold probably giving back some of its gains here. Probably, yeah, the US dollar finding some traction on the downside, respectively, yields probably short-term lift bounces in US yields here. This could all result in gold giving back some of its gains of the last days, probably pushing us to the region around 1,300 USD, probably 1,295, the region here of these highs from November. And nevertheless, against this level, I think long engagements in gold are definitely attractive, and it's worth watching this region as a potential long trigger here, and then probably go down in the time frames and look for entries in the short term or in shorter time frames here, and then probably migrate these trades to a higher time frame. Could definitely imagine gold to probably push higher in the next months here, especially if the US dollar stays under pressure, and gold pushing not just towards the highs here of 2017 around 1,360 USD per ounce, but also pushing above that level, probably bringing us up to 1,400 and probably also above that. So probably midterm. Such pullbacks here, such pullbacks are probably interesting. Pullbacks against 1,295, 1,300 USD are interesting to watch and attractive for midterm long engagements here, which could push us higher then. And that's it from my end. So happy trading. Watch your stops, and talk to you again then tomorrow in the morning meeting, 10:30 a.m. GMT. I definitely look forward to it. And yeah, all I have to say is happy trading. Watch your stops. Take care, enjoy yourself, and talk to you again tomorrow. I look forward to it. See you, and bye-bye.